Hi traders, this is Jason Lloyd from Forexsuggest, and today we are going to be taking a look at some of the top 5 most volatile Forex pairs. Be sure to like, subscribe and click that notification bell to stay up to date with our latest videos. Let's get into it. Due to the dramatic movement of prices of certain currency pairs, they offer traders more enticing predictions for profit. Although trading such pairs may also expose traders to significant risks. Volatile Forex pairs are affected by the same factors as less volatile Forex pairs, which includes interest rates, geopolitical factors, and numerous others. When trading volatile Forex pairs, it is imperative for traders to note that these pairs often present lower levels of liquidity than less volatile Forex pairs, and it is therefore imperative to ensure that traders have adequate trading plans, adequate risk management, and well-tested strategies. Traders who are searching for some of the most volatile currency pairs can sometimes find it to be a difficult process. So, in this video, we are going to be taking a look at some of the top 5 most volatile currency pairs. Coming in first at number 5 on our list, we have the Great British Pound and the Australian Dollar. This pairing consists of the British Pound and the Australian Dollar. When viewing the history of this pair, and the way these two currencies are linked, it is mainly due to Australia as part of the Commonwealth of Nations. The Australian dollar is a commodity currency, and thus the price of the Australian dollar is heavily associated with and affected by Australia's exports. One of the predominant knock-on effects that Australian imports are experiencing are due to the trade war between the United States and China, and the subsequent fall in Chinese markets, which have resulted in Forex pairs which contain the Australian dollar to increase in volatility. Whereas the Great British Pound outlook warns traders of a volatile week ahead, the Australian dollar outlook is hinged on the RBA meeting and the Australian budget update. Coming in at number 4 on our list, we have the Canadian dollar and the Japanese yen. This pairs the Canadian dollar with the Japanese yen, and it is seen as a strong substitute for the US dollar to Japanese yen pair, for traders who are wary of trading the US dollar with current economic and financial conditions and uncertainties. This pairing is also historically more sensitive to any changes that may occur in the market-wide sentiment, as opposed to the US dollar and Japanese yen pairing. As a result of historically higher yield, which is attached to the Canadian dollar. The Canadian dollar is also known for being susceptible to oil prices due to Canada's energy exports. The current forecast on the Canadian dollar to Japanese yen is that the Canadian dollar is bearish due to the Bank of Canada's decision during the COVID-19 pandemic, whereas the Japanese yen is bullish as the S&P 500 falls on stimulus woes. Coming in at number 3 on our list, we have the Euro and the Great British Pound. The Euro to Great British Pound is a pairing of the Euro and the British Pound, which is nearly consistently in a volatile state. It is one of the currency pairs which is traded the most due to the marriage between two significant European economies, namely the EU and the United Kingdom. The current volatility on this currency pair, in addition, also attributed to the Brexit update and trade deal negotiations which are set to resume, with a deadline on an agreement set for the 15th of October by the UK Prime Minister Boris Johnson. In addition, both the EU and the UK are set to release gross domestic product data during the upcoming week, as both economies emerge from the previous last years of lockdowns as a result of the COVID-19 pandemic in an attempt to curb the spread of the virus. At number 2 on our list, we have the New Zealand dollar and the Japanese yen. This currency pair is between the New Zealand dollar and the Japanese yen. As with the Australian dollar and the New Zealand dollar, it is also a commodity currency, which has its value closely tied with the agricultural exports of New Zealand, which makes this currency substantially volatile. The main exports in New Zealand include dairy, eggs, meat, wood, honey, and others. And as a result, the slightest change in these exports will drastically affect the value of the New Zealand dollar against the Japanese yen. Not only is the Japanese yen a safe haven currency, but it has a history as a low-yielding currency, which makes it an attractive vehicle to fund carry trades. Such trades are often favored by investors during times of optimism regarding global economic performance and stability. Considering these factors, it makes the New Zealand dollar against the Japanese yen particularly susceptible to swings in broad-based market sentiment trends. The Forex pair is therefore also highly likely to respond to economic news, both domestic in addition to that of key trading partners. These factors greatly shape expectations for the Reserve Bank of New Zealand and its monetary policies. And coming in at number 1 on our list of some of the top 5 most volatile currency pairs, we have the Australian dollar and the Japanese yen. This currency pair represents a pairing between the Australian dollar against the Japanese yen. This pair is an exciting pair to trade due to its relation to risk, in addition to being one of the most highly correlated pairs to price action. This price action in US equities is on a short to medium term basis, and the US dollar to Japanese yen is known for its tendency to rise in a low risk environment on carrying flows. When the opposite is true, it is not difficult to see an approach associated with risk off in the markets. The forecast on this particular pair is that the Australian dollar is to remain neutral, whilst the Japanese yen is bullish, as there is a rise predicted as the S&P 500 falls based on stimulus woes. The Australian dollar is a commodity currency, and therefore the price thereof is linked to the price along with the volume of Australian exports, including minerals, metals, and others. The Japanese yen is widely considered a safe haven currency, and one traded most during times of economic uncertainty. And those are some of the top 5 most volatile currency pairs on our list. Be sure to subscribe to our channel and leave a like if you enjoyed this video. Leave us a comment on what you would like to see next, and let us know which online broker is your personal favorite. And that's it from me for now. To open an account with Forexsuggest, click the link in the description. Thanks for watching, and as always, good luck with your trading activities.